good enough. Boom. We are alive and live on YouTube, ladies and gentlemen. We're going to be going over Bitcoin, Ethereum, Avalanche, the S&P 500. I think we'll do the dollar, and then we'll keep the end of the episode available for, first off, our private members' questions, which will be posted in the Discord channel. So if you got questions and you're in the private group, ask them there. And then more of a broad spectrum spot for those of you in the YouTube chat. So if you're in the YouTube chat, I won't look at that until the very end. I apologize. Unless you leave super chats, then technically those all stay highlighted. So you have that option as well. Okay, so what I'm going to do, everything seems to be working clearly. I think I tested it all out before. We're going to make sure really quickly. And then, yeah, we're gonna, there we go. This is, oh, that's the S&P 500. Let's not start there. Here we are with Bitcoin. Following this nice accumulation channel between May and November of 2023, had our spring, our first micro SOS into a nice reaccumulation and backup phase here, and now into a real sign of strength. Now, I made a tweet about 3 weeks ago when Bitcoin was at 30 grand, saying Bitcoin to 43 grand and then down to 36. I'm starting to think we go a little bit higher. I discussed this in previous videos, but just for fun, let's go over it again. We've seen this one before. It's called a widening megaphone. It's one of Jesse Livermore's kind of infamous patterns. And I usually only look for these on large time frames coming out of the spring. So we've actually seen this before. So let's, for fun, go back to the past here. This is the Ethereum we're looking at right now. So Ethereum, again, on a large daily time frame, noticing the very bottom of the spring, this widening megaphone pattern. So bottom of the spring for Bitcoin, widening megaphone pattern. We actually even saw this for Bitcoin out the bottom of its March 2020 spring as well. Once we get to this 0.6 or 7, I suspect we're going to get a reaccumulation channel somewhere along the way. For Bitcoin previously, that was only a 15 to 20% drop. So let's compare that with where we're at today. Does that equivocate in any way? Only 6 to 10. We haven't gone low enough yet. I would like to see something lower. Again, I said 36,000. But at this point, we're somewhere between 50 and 40 or 36. Again, what's nice about trading ranges is you can make a pretty easy assumption that this will be the bottom of the range, and then somewhere up here will be the top of the range. Now, where exactly that fits, it's hard to say. This may end up being the PSY. We don't know exactly. So being patient here will effectively bode the best. We've already completed so many touches on this move. Again, when you compare with the widening megaphone pattern at the bottom of the spring for Ethereum and the move that came afterwards, and the same move again for Bitcoin just in its past year. Here's the 2020 bull market or bear market spring, which is when you see significant amounts of, see all the volume and supply signature. This is so important, everyone. If people are charting trading ranges and they're not indicating the volume and supply signature, they're going to get it wrong often, because trading ranges are very deceiving unless you know what to look for in the supply and demand characteristics. So here the spring was highlighted by a massive amount of supply, but very diminished price movement to the downside. Again, we didn't see that amount of supply come in again until the primary shakeout, which is a conversation for later. But this widening megaphone pattern and the potential for what's coming next in Bitcoin is going to be explosive. I think we could see a movement of highs for Bitcoin that we've just never seen before. The level of trust in the U.S. economy is failing. The level of trust in currencies around the world, in governments around the world is failing. I think time and time again, it's been proven that the governments would kill you if it improved their balance sheet. And we're in a lot of countries right now, their pensions, their Medicare, their Medicaid are in a place where they can no longer take care of the amount of people that were there without just printing an infinite amount of money. I think what's coming next, they're going to turn the monetary printer on. They're going to inject monetary heroin so that everybody starts to feel a little bit better during all of this pain and criminality that's been going on. And then the markets are going to skyrocket. We're going to continue to go over why we think that thesis is the same, Been talking about that for months now. When people are dying, start buying. Again, if you look at this is a very significant thing to take into account, but I don't know if you know what October 7th was, but it was effectively the day apparently someone named Hamas attacked someone named Israel. I'm not entirely sure about either of these things. It's just some space and time narrative. Nonetheless, within a few days, Bitcoin rose 60%. This old adage of when there's blood in the streets, you should be buying is very hard to explain. Human psychology and human nature is almost sociopathic in some of its instances. It is not a great progenitor of compassion in moments of wealth. The opposite thing happens when greed is true. Everyone starts buying nice watches and nice cars. Everyone's, I individually did this all by myself, when they're still standing on the shoulders of giants. Nonetheless, let's get away from human psychology for a moment. And again, remember the technical charts that are so important to understand. Somewhere around October 7th, Bitcoin ran. Now, since November as well, we're already up 70% for Bitcoin into that. So over 167% from the bottom of the spring. And we had been measuring excess deaths in the private group for many months now. All these countries have been running hot. More people have been dying than ever before. And that was the indication for us to go long. It's hyper counterintuitive to do that. But once you understand that human nature is not necessarily in alignment with itself at the moment, or at least the nature and the markets are not apparently in alignment, because you'd think human prosperity would be up, but they're kind of inverted. These are inverted signals. And they've worked for longer than I've ever been alive. And so when you have something that's been working for so long, you need to rely on human nature not changing for even longer. You know how long chairs have had 3 or 4 legs? A really long time, So I want to go back here and I want to make a quick little jump in here to make sure everything is working. If you guys can give me a thumbs up in the group chat on YouTube, it'll be awesome to know that everything's working. I haven't done a live stream in forever, so that would be great to know. Okay, so let's go back into Ethereum. Okay, so again, Ethereum had a very similar widening megaphone pattern. I don't see that evolving today, although I see a fairly powerful accumulation range taking place. So for those of you that are in the Bear Den group, this is, we were just looking at the Fed decision. So the Fed has decided to stay dovish and not raise rates. But more importantly, let's go back to our reaccumulation channels. So Wyckoff accumulation schematic number 2, where phase C never comes down to touch the bottom of the range, is what I believe we saw for Ethereum. Now it looks like Ethereum made its first little SOS and portion of its backup phase. Now let's just for fun go back all the way here to see what Ethereum did last time. Let's get rid of our widening megaphone. The green lines here represent, roughly speaking, the trading range. To perfect it, it's actually more like this. We saw a big SOS and then a backup that came all the way to the top of the box. With where we are with Ethereum right now, the exact same thing is taking place. We're seeing an SOS outside of the box and a retracement back to the bottom of the box. This could go on for some time. At the moment, though, Ethereum kind of sucks. It's got a lot of value locked in it, so we can make an argument that the more valuable or the more secure something is, the more expensive its fees become. But personally, Avalanche is just way freaking better. And if you guys were on the last video I did, Avalanche was down here, and I said screenshot this because you're gonna love how powerful this move is. So here, Avalanche was only at $20.90 when I said screenshot this, and it's up 90, close to 100% at the previous peak when I said that. And there's a reason why. It's because these trading ranges are extraordinarily profitable once you know what you're doing within them. Now, they don't always move the day you want them to, especially when you have massive assets like Ethereum. But I think one of the reasons why Ethereum is growing so slowly is because people are starting to realize the tech just isn't that good. I've often compared Ethereum to a Honda. It's great. Hondas are great. Everyone would like a Honda at one point in their life. But if you want to upgrade a Honda, all you can do is like add a turbo and maybe an intercooler and like a spoiler and better suspension, but you're adding onto a Honda. That's it. It's still a Honda at the end of the day, no matter what modifications you make to that vehicle. Whereas with something like Avalanche, you're dealing with a different beast. It's a different vehicle right from day one. It's capable of more things. Now, Solana also falls in that category. And we'd actually made a few jokes about Solana, saying, oh, look, Solana is kind of like a Lamborghini. It's really fast and it's an awesome sports car, but every now and then it starts on fire. You know, a Lamborghini will start on fire more often than a Honda. If you were to buy a Lamborghini and a Honda and drive them both around as a daily driver, the Lamborghini is going to start on fire first. It's going to break down first. It's going to have a lot more problems first, but it's a Lamborghini. So it's difficult to compare these vehicles or modes of transport for data or value. Often, something breaking would be apparent that that's not a great thing or being more expensive to fix. But in the world of cars, a Lamborghini looks way nicer on the street than the Honda, and no matter what you do to the Honda, it will probably never keep up with the Lamborghini. Maybe there's new technology like a Tesla that's coming, but until then, Avalanche sits as one of these very nice vehicles that was built as a better vehicle right from day one. So Avalanche has actually been an awesome educational tool here for us. We've got an email coming out in the private den, but what I wanted to do is share another schematic. This is accumulation schematic number 4. Notice the top of the dotted line. This is what's traditionally known as a falling wedge. Falling wedges anywhere outside of a trading range are basically useless, at least from what I've discovered. If you find people trading them outside of a wedge or outside of a trading range, you can assume that they don't actually know what they're doing. Oh, we're assuming Gardner's probably here to work on some things. So if these trading ranges are not horizontally taking place and you find like something like a falling wedge, I don't take positions there because they're not very reliable. The entire point of this trading range methodology is to bring as much confidence and reliability to each trade that you want to make going into it so that you can be as calm as possible during the process. So this falling wedge for Avalanche here took place. Now, I just wanted to go back in here because the next thing that took place is called a reaccumulation. Now, reaccumulations are much smaller. Accumulations can take a few hundred days, sometimes 1,000 days. We saw with Bitcoin in 2017 from 2013 to 2017, it was almost 1,000 days of accumulation before the breakout. With Avalanche here, it's been 550 days of accumulation into the bottom of the wedge. So to the bottom of phase C was 500 days. We just, so we just basically completed the LPS as well. So let's hide some of this. So this little structure that we're zooming in on here, this beautiful reaccumulation channel, ended up being the LPS. We've now entered the first sign of strength. And look how beautiful this is. The only difference here is that we moved significantly outside of the box to complete this. So just for fun, we'll put our drawings back. I'm sorry, I got to keep kind of both drawn in there at the same time. Our first major resistance was at $36. We've broke through and back tested that once already. We've got other resistance points up here at around $52. There's a very high likelihood that we start to create a new trading range here, something very similar to what we had witnessed here. And this was a very profitable position for anyone who chose to take it. And it was a very confident one as well, because this was the nerdiest, perfect chart art a human could wish for. It was beautiful. So why do we study these things, and why do we remain calm when everyone's yelling, oh my God, the markets are going up, the markets are going down? It's because once you go through and you understand human nature is not going to change, no matter how many people know about Wyckoff's methodology, it's still going to work. The problem is you. You're the problem. Well, not you specifically, but sometimes you specifically. If you've ever been in a market position and you sell, and then 5 days later the market goes ripping, it almost feels like the market is specifically aiming at you. Like, I saw you, you weak paper lettuce hand. Like, now that you're gone, I'm going to go up. You're what's usually counted as the last points of the last points of supply, the very few people who are holding on just before the market explodes. And sometimes you'll buy right before the market crashes. This is human nature. You really need to figure out how to do the opposite thing of what you would expect to be normal. So when we realize there's a bunch of extra people dying than normal and the birth rates have gone through the floor, we start accumulating assets. The normal person thing to do would go, oh, wow, people are dying and birth rates have gone through the floor. I should sell everything because this is horrible. Well, you're right. It is horrible, but you need to learn to do the opposite of what you think horrible would be, because in a market sentiment analysis, they're opposite of each other. Human nature and the price are going in different directions. People usually don't want to buy anything until it's more expensive. I could sell the same thing. If I sell it for cheaper, people will deem it to be less valuable. It's one of the reasons we charge for our private group, is because if I just give it away, most people think it has no value. But if I charge you and you have skin in the game, then you're going to do the homework and you realize how much value is there because you've opted into that relationship of value transfer. So humans are really weird this way. We're wired almost kind of in the opposite sentiment. When price goes up, we think something's better. When price goes down, where you should be buying, the value of the thing has not changed at all. Maybe you're buying like gold, for instance. Gold's value is technically always the same. It's gold. What's its price? Well, that's a bit more speculative about what gold could be. Is it scarce? And all these fun things, which is also why we stick to technology. So for fun, for Avalanche, we saw our PSY, our primary support, our Brian climax. I'm going to highlight these as well. Our primary support is the creek. This is where I started to take big positions. Our SOS, LPS, SOS, and LPS. So we could actually be starting to form the new trading range now. And in the private group, I had already made this kind of assumption that this movement here down at $34 would actually end up being our primary support. And I think that's the most likely at this point. I think the price is about to move all the way back up to maybe $44, $45, print a new series of the secondary test high somewhere around here, and basically create the top of the trading range. And then we'll see one more time down here to effectively justify where the bottom of the trading range is, somewhere below $34 effectively. So let's look at this again from another angle. Here we are with our reaccumulation schematics. There are so many different types of these. It's like looking for a pine tree in the forest. Every pine tree is infinitely different, yet there are clear, visible signs that it's a pine tree. You're like, hey, look, that's a pine tree. That's a fir tree. Oh yeah, that's a ponderosa pine, a little bit different than the blue pine. Anyways, the point of this is, even though when we're out in the wild and looking through the forest, each tree looks infinitely slightly different, they're basically all the same. So each of these reaccumulation schematics are significantly shorter. So again, just to highlight for everyone that's going through this study process, here's a schematic number 3, an inverse head and shoulders throughout the trading range, usually taking at least 300 to 900 days. If it's shorter than that, it's not an accumulation range. Wyckoff reaccumulation ranges are usually somewhere between 10 and 50 days, about 10 times less than the accumulation range. And they're less reliable. But when you have, as we were seeing with Avalanche, an accumulation schematic that then moves into a perfect reaccumulation schematic. So again, compare this to what we were just looking at with Avalanche. Here's this beautiful reaccumulation with our spring, our support, our test, our spring, our support, our test. Well, kind of similar here, right? A pine tree in the forest. It's still a pine tree. Spring is a little bit off. Let's see, is there a better one? Yeah, you could actually, this would maybe be a little bit better of a look. You call it the spring, the support, the test. But again, it was a little bit different. We had a deeper spring here, a test that was slightly higher, the jump across the creek, and the back test of the creek moving into significantly higher territory. So this is a very confident trade and did well for everyone in the private group. There's going to be a bunch more of these. So when you have the confluence of a long-term accumulation range that then moves into its very first accumulation range, it's going to go ballistic. So just for fun, let's take another look at where this has happened in Fetch and Link, because these have been two other trades that we've both watched and taken in the private group. So with Fetch, I want to give a shout out to Glasswalker. He properly identified this one. I agree with him as well. I think what we saw was a reaccumulation schematic after decline. So here we had this top, a little bit of decline. The price has gone up, fallen back into accumulation. Price went up, fell back into accumulation, couldn't quite test the bottom near phase C. Yeah, looks right to me. And then continued up into its first LPS and SOS phases. Now its first, and this is where I think it's super important to understand, is as you start to zoom into these, you get a really beautiful data picture of why going long at particular points was valuable. Now you have to zoom in quite a bit. So we've gone down from the daily to the 45-minute. This little very first reaccumulation schematic, which would only been about 25 days. Very 2 days, even shorter. Sometimes it can be shorter. Reaccumulation schematics can be shorter. In Link, on the next one, we'll show you it was around 20 days. But then again, the breakout to the top of the box, we waited till this moment. We look for confirmation. Here, a reaccumulation schematic around 20 days. And from the movement of that into another reaccumulation schematic. And again, I've asked some of you guys to mark this up here because I don't want to continue doing it. I'm trying to teach you to do the fishing for yourselves. 40% up from the bottom of the box for fetch again. So if you had taken the entry and just done nothing from the secondary test here, you're up 79%. That's amazing. So let's take a look at Link. Link did something very similar. We highlighted this also in the private group. I also was highlighting these on the YouTube channel too. So if you're doing the homework, inside of the box for Link, let's zoom out a little bit further because it makes more sense. Okay, here we go. For Link, 534 days of accumulation within the box. Every time we got to the top of the box, distribution. Every time we got to the top of the box, distribution, distribution, distribution. But all of a sudden, on October 7th, everything changed. When people start dying, you start buying, okay? It's so hard, but it's really easy. It just is not easy for you if you're a kind human because you have to learn how to be a sociopathic person for a minute and go, oh, wait, hey, everything's horrible. I'm going to go long. Hey, guys, shit sucks. Let's go long. That's what you got to do. So anyways, on October 7th, right here, we started to form a reaccumulation channel within inside the box. It was approximately 25 days. It gave you 25 days to test this range. Again, you don't try to enter here, here, or here. You wait generally for this jump across the creek. There wasn't a lot of time before we saw our next reaccumulation schematic, which we went over in the private group. I'm surprised this isn't labeled. I had it all labeled prior, but I may have deleted it for some reason. Anything below the point of control here for our VPVR. I know there's a lot of you guys are learning, so you really got to you got to expect that it's going to take a year or two to understand all of the data I'm sharing. So just be patient with yourself as you're going through the learning process. Don't try to figure out all today. Even if you're in the private group and you're getting like the one-on-one education with our peers effectively, it just takes time. It's like learning an instrument. You're not going to get it today. So just be patient. But once you get it, it's profitable for the rest of your life. So today, tomorrow, a year from now, 2 years from now, just make sure you're getting it right. This reaccumulation schematic turned into a massive run from the top of the box, up 40%, and now we're in a real big reaccumulation schematic for Link again. Now, there are some arguments about whether this was a upthrust and afterwards a distribution. It's too early in the game. Again, generally speaking, when you've got 500 days of accumulation within a box, a small trading range like this, having that upthrust is not a negative thing. We've seen countless times what you'll witness is an SOS that moves to the top of the box, and just so the market maker gets rid of any leverage, they push it all the way back down to the bottom. They sell literally everything that they have in their bucket to try to get rid of people that are in leverage positions. So what I suspect will happen, and we've seen happen a few times before, is that these actually turn into horizontal ranges. Now, if you're new, never chart like this, okay? Don't chart like this if you're new, because if you start charting up and down ranges, you're going to get so many things wrong. Keep everything horizontal, but just for future you, if for the future you that's better at this, understand that sometimes in the back of this SOS phase, you can have a horizontal trading range. So just for fun, I'll show you what that looked like. It happened with fetch. It was a little confusing for me at first, and I remembered, wait a second, I've seen this a bunch before in 2020. So let's take a look at this here. I'm going to kind of quickly draw this out. So here with fetch, it was something like this. Boom. So this is a horizontal down range. Again, I don't want you to draw them, but just for like the purpose of education and like giving you more than one class at a time. This is for future professional trader you. And there's a few of you in the group that are already at that space now, but this is how I would look at it. Buying climax, shakeout, secondary test, spring, test, secondary test, spring, noticeable by the volume signatures both here and from our secondary test of the main range, and then our final test before moving up again. We've very often seen SOS phases come all the way back to the middle of the box. So here with fetch, it moved all the way to its SOS, and then its backup came all the way to the middle of the box. Obviously, if it stays above the top of the box, it just goes to show that there's that much more strength within that play. So that's what I wanted to share for today. Lastly, the S&P 500 is almost at new all-time highs. I don't know if y'all know how crazy that is, but this is a monster piece of data. We are right now 2.19% away from an all-time high. 2.19% away from the all-time high for the S&P 500. And a lot of people are sitting there like Capo, Mr. Crypto Capo, going, oh my God, they're manipulating the markets. I can't believe how many times I see people say they're manipulating the markets. No, the dollar is worth less and less all the time when they print more of it. So anything that has real value, like an asset, will go up. The S&P 500 is going to go to new all-time highs. Michael Burry was so wrong. He made a mistake in thinking that the markets were overheated instead of realizing the dollar was toast. The dollar's screwed, ladies and gentlemen. There's no trust in that ecosystem anymore, and it's going to continue to lose its value as time moves on. So I suspect we're going to see new all-time highs. Now, just for fun, this is also a reaccumulation after decline. So as we pointed out with fetch, these are one of the weaker reaccumulation schematics. They have less power than the just general reaccumulation schematics. Again, like the one we saw with fetch, that was perfect. That was so sexy. Or sorry, with Avalanche, that was like one of the sexiest trades I've seen this year because the technicals were perfect. It's not that technical analysis doesn't work. It's just that most people don't know what they're doing. So it makes it look like it doesn't work. Like, oh, there's a falling wedge here, or an inverse head and shoulders here on the 5-minute. It's not how this works. So let's go back to the S&P 500. This is a reaccumulation after decline. That's exactly what we saw. Here's the decline, and here's the reaccumulation, both SOS, backup, and into an SOS phase. These don't go too much higher. I suspect that the market here is overheated, but it could go significantly higher. It's also very likely that this is going to go higher in alignment with the elections. They're going to try to pull a fast one on people. Now, if you believe that the elections are totally safe and effective, you've not been paying attention since like the 1950s, okay? The CIA has specialized in rigging elections in every country around the globe. If you think they're not doing it on sovereign domestic territory, you're brainwashed, okay? So I might sound like the crazy person, but you should figure this stuff out because it's easy to read their declassified documents. And you can go, well, Tio, you just have no good argument anymore. The only good argument now is that the conspiracy theorists were right, and we have to consider this a conspiracy axiom. And just for those of you that don't know, what's a theory versus an axiom? Maybe you don't know. I'm assuming some of you know. Maybe you don't know. But for fun, let's go over that. The difference between axioms, theorems, postulates, and corollaries. Hold on, we go. Axiom. An axiom or postular assumption statements to be taken as true. So we've gone from a theory into an axiom. That's what happened. Somewhere around 2020, 2021, you should have realized by this point that we went from a conspiracy theory to a an axiom. I just don't see any other way around it now. Now you have to prove the opposite thing to me is true for me to believe you. And I just don't see any good evidence for that. A lot of people would like to think that, oh, there's nobody in charge. No, somebody's pushing the button, okay? Somebody has to push the button. If I don't turn my computer on, computer don't turn on, okay? That's just how this works. If there's a button and you need the button to turn on for it to work, then someone had to push the button. It's pretty simple logic. It's not too far out to think. Anyway, so reaccumulation after decline for the S&P 500. We're going to go to new highs. And then lastly, let's take a look at the dollar. The dollar here right now, I suspect this was an upthrust and distribution. I don't think we're going to go much higher for the dollar. I think we're going to come all the way back down to this red line. That red line is a multi-year support. Let's get my wording right. The dollar here is at a multi-year support. It already had an SOS, a breakout, and an SOS. Now, you could make an argument that this LPS, this is just an LPS phase, and the dollar is going to go higher. I don't see how that could ever happen in the current environment that we are in. They're going to print more money. They have no other choice. Every government has gone through this at one point or another. They have no choice but to print more dollars and then to try to inject the system with monetary heroin right for the elections again. So that's my current thought. That's the current thesis. We're going to go up. We're going to continue to go up for most assets because the dollar is fucking worthless. So we're going to take a minute here and look into the private group for any of the thoughts or questions. Mr. Jackson in our private group asks, what are your thoughts on Polygon as a long-term play? It's heading out of the long-term trading range, and I'm thinking about making an entry. Great question, Jackson. It shows the confidence in understanding a few things that we've been learning, so congratulations on that. I'll take a look at Matic. Now, first thing out the gate is it's just an intercooler or a spoiler for a Honda. I don't think it's that exciting, personally, tech-wise. Now, this is actually something that's pretty interesting. I want to make an argument here for you that I don't think too many people are making. And this actually looks pretty sexy to me. So this looks like a cup and handle. Now, again, normally I don't like this type of trading, but here's your trading range. This looks like a perfect cup and handle to me. So just very quickly, I'm going to open up some really old documentation here, one we haven't opened up in quite some time. So just give me a second. Again, I don't normally like the cup and handles, but you picked something that happens to be that way. They're also not one of the stronger leading indicators of the things that I would like to take a look at. But nonetheless, we can't win everything in terms of what we want to look for. And you asked a question about something specific. So let's look at that something specific. Okay, there you go. So this is from our really old data set that we had created back in 2019. This is what some of our accumulation schematics used to look like. This is what a cup and handle generally looks like. I actually saw this for Bitcoin in 2013 to 2017 as well. Notice that the cup and handle are a mixture of the handle within and outside of the box for its SOS. So that's what I think is happening here. I think you're seeing a mixture of the handle inside of the box for this cup. Now, just for fun, you could actually, again, let's just remove that particular pattern and just look at this as a horizontal trading range, and that this is effectively your PSY all the way back down here at the bottom left-hand corner. Now, well, this is a difficult one because, and this has to do with the nature of scale and variance here as well. It would be easy to say that we're already in the SOS and backup phase, and that this itself is also a reaccumulation after decline. So I could make arguments for both of these, that A, there's a larger trading range taking place with that cup and handle, but also this. So let me know if you guys can see this. Here's the reaccumulation after decline. Here's the top of the reaccumulation and then decline into this much smaller accumulation pattern down here, where you had your selling climax, your secondary test, your spring, your test, your SOS, your backup, your SOS, LPS, and then the likelihood of another LPS. Both of these would look valid to me. This is a very complex structure, but from a technical standpoint, Polygon is nothing but an intercooler for Ethereum. So just I don't really like Ethereum anymore. The other day we were in our board meeting, we were like, we should sell all of our Ethereum for Avalanche. I was like, no, we'll keep some Ethereum. And then like 5 days later, I was like, no, we should have sold all the Ethereum for Avalanche. That was clearly the much better positioning to be in. And when we see big moves in something like Avalanche, you can't help but think that, well, that's where the market wants to go. The market is also doing the same thing for Solana right now, where it's gearing up to move higher. Now, I think that this is an SOS and an LPS phase. So I think you're going to get a run up in Matic, but I don't think it's going to be a dramatic or a more fun place to be than an Avalanche or a Solana. So just for fun, because I've mentioned Solana twice here, let's take a look at Solana. Okay. So Solana was also a very complex trading range on the daily. Here you can see again, this is what I like about these trading range data points. Here's what a head and shoulders looks like within the trading range. Left shoulder in A, head in phase C as the spring. Phase D is the right arm somewhere as a test below the middle of the trading range. So we talked about this a few times. This looks like an inverse head and shoulders, effectively, right? Here's the bottom of the range. Here's your spring as your head. So I think Solana performed an inverse head and shoulders throughout this horizontal trading range effectively. We already are into the SOS and backup phase. So just for fun, Solana's about to take off again. So I'll show you a few reasons why. Number one, do your charting. Here's your buying climax, your shakeout, just because why not? Everyone gets a free lesson today. Your shakeout, your secondary test, your spring, and notice here. Let's again remember, it's not just about the trading range; it's about the volume and supply signatures. So let's make sure we're pointing those out. Here's your shakeout volume here, and notice your spring volume. They're usually equivalent to one another. Boom, boom. Now, this secondary test is almost always, and this is a resistance test. So there's actually, let's rename these for fun. You can call this an upthrust during this one. I call them tests of the top of the range. I call them tests at the top of the bottom the bottom of the range. They're both the same, basically. As long as you know what you're doing, it makes sense. So we'll go shakeout, and then we'll call this one the secondary test. So buying climax, shakeout, upthrust, secondary test. Notice again how both the shakeout and the secondary test supply signature are in the same area, and then the supply drops off significantly before the spring comes in, which has equal supply signature to those two. The next part that's important is looking for the LPS. LPS ranges are almost always equally equivalent again to the shakeout and the spring volume. So if we go horizontally with this green line here at the bottom and we pull it down, we will see that yes, our spring and our LPS ranges touch the same amount of supply and volume signature. That's how you know the market maker is doing well. So it appears to me, again, and this is where I will jump ahead for some more educated traders in the group. Notice this. Notice this horizontal falling range, not wedge, falling range as the SOS pattern, as the SOS into backup pattern into the top of the trading range. Now, the fact that Solana is already broken out and breaking out right now, let's go a little closer so our data field is a little bit more clear. So again, for those of you that are in the more advanced courses of your study, from the PSY to here, you have your buying climax, your shakeout. Well, so again, I would call this your spring here, the significant supply that comes in. Springs are normally the biggest supply signature. And then right now it looks like we're in an SOS phase. So I think the spring test and then the SOS phase is starting. Very quickly, Solana is going to be back at $73. We'll probably get a little bit of an LPS phase between 71 and 73. And then Solana is ready to rock and roll. Anyways, I know that wasn't about Matic totally, but I just wanted to also highlight that there are other assets that are moving quickly outside of their range with less complications and much clearer trading ranges. And that's usually a better trade, both for the long term and for the short term, usually, not always. But if they're performing well now, they're usually going to outperform the other things that are not performing well later. And as I mentioned before, I think Polygon, Arbitrum, Optimism, these are all just add-ons for the Honda. It's not even the Honda itself. It's just like an intercooler. How valuable could that be? Whereas Solana, Avalanche, these are different vehicles. They're better vehicles often, as I would say. Now, again, like Solana, the Lamborghini might burn down a bit more often than the Honda. So the Honda's more reliable, but Solana's better for video games probably because of the Rust developer code base. It's a whole bunch of arguments we can make, but effectively when you're dealing with a nicer vehicle, it's going to start on fire more often. It's just facts. If you have $1 million watch, you don't take it swimming. You take the Casio swimming, right? Honda's better to go drive at the beach. My Toyota is way better to drive through the jungle than a fucking Bentley. You're just going to break the Bentley, whereas the Toyota will keep going forever. So you have to know that there's a utility in each of these styles of vehicle and when and where you would want to drive them. Okay. Great question, Jackson. Hopefully that was helpful. I know I didn't focus on Matic too much, but also wasn't super stoked there. Would you say a cup and a handle on Matic? Yes, I just did, but not at that smaller time frame, and not like that. But yes, I'll share it more deeply in the private group for those of you that are asking. Okay, let's see. Any more thoughts and questions that the private group had asked? What is going to happen now? Great. Oh, my dear Alex, if I only knew what was going to happen now. Let's actually take a look at some of the what is going to happen now data. Excuse me. Still getting over my cold. Okay. The Federal Reserve keeps rates unchanged for the third meeting, but rate hike is still an option. So the Federal Reserve's Federal Open Market Committee keeps policy rate at 5.2 to 5.5% on Wednesday is expected, the third straight meeting of not raising in a row, yet still kept the door open for additional firming. We've talked about this before with the way disability looks, with the way excess death looks. We're in a massively deflationary environment, and the fact that they don't know that yet is just retarded. They're going to hit a point where one day it just dips down. Now, the cost of consumer goods is much higher, but that's not inflation. They're lying to people about what inflation is nowadays, and they've been able to point blank lie to people about what inflation is and how much it's risen or changed at all. Inflation is not the cost of everyday goods. Inflation is the inflation of the monetary supply, which is massively up still. That ends up in higher consumer price goods. It actually ends up in higher priced everything. The reason why your house is worth more isn't because the house is more valuable. It's because the dollar is worth less because they've been inflating the currency supply. Somewhere along the way, they started to trick everybody, and inflation is just the cost of things going up. Well, no, that's not true. It's the inflation of the monetary supply. It's what the term it comes from. Jesus. So don't listen to them when they're lying to you. Just do better homework, I guess, to some degree. The FOMC meeting didn't soften language from previous statements and said that they have to do this just to try to keep the dollar as value as possible for as long as possible before the air totally gets popped out of that ship. They will start printing again soon. We are in the most deflationary environments that the world has ever seen. So here we go. Taking into account cumulative tightening for the monetary policy lags, monetary policy effects, blah, 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 blah. The Fed just speaks a bunch of bullshit, basically. They're not going to raise rates, but they're pretending to be hawkish enough to make people around the world think that if they need to, they will because they don't want to wreck the dollar. So what's that going to be? Markets are going to go up. S&P 500 is going to hit new highs. Bitcoin is going to go to new all-time highs here within the next year or two. The rest of our asset classes are going to run like monsters because they're still more valuable than the dollar ever will be going into the future, because they've just absolutely pissed all over that thing. And thank you for joining today's live stream. Oh wait, I did promise the non-private members I would take a look. But so remember, for those of you who are non-private members, the sickness from the modern investor comes from over-trading, overstimulation, and a lack of education. So if you have not yet done so, go to arcanebear.com/private and sign up for the private group, because that is where you will find the cure to all your bad trading mistakes, aside from leaving money on trading exchanges. I made that mistake too. So some mistakes we just can't teach. You just have to learn through experience. It's like, well, y'all going to make mistakes sometimes, but to hopefully help curb as much of that as possible, the community is very strong as well. And there's a no risk guarantee. So if you buy this damn thing you're not happy with, give your money back. Like, how could you not want to take that risk when there's no risk in a market, when there's so much money to be made? Okay, so back to the YouTube questions, and let's see what the private people or the non-private people have to ask. Gang. Let's see. Hit the likes. Yes, thank you for reminding me, Rich Johnson. If you guys can hit that like button. I haven't done a live stream in forever, and I appreciate y'all for joining in this one. Avalanche is pumping. Yeah, it's going to continue to do that and then build a new trading range. Avalanche's gaming projects are moving from Magic to Avalanche. Avalanche is one of the best posed there for AI and gaming, better than Solana. So Solana doesn't have the same features it needs for AI from what I can tell, but Avalanche does. So you've got like 3 very strong narratives for Avalanche that we are hyper excited about. But all I can see is the top of the mountain, not where we're actually going to end up going. Pierre Peterson says, I see you have A0 on your watch list, NETA. We are early investors in A0. We've got a little spot bag left. Not going to focus on this TA right now. I think it's going to continue to go up. How about that? If you want to know TA of A0, you can join the private group. I'll share some in there once you join Mr. Patterson. Tio, you're a legend and a gangster. Well, thank you. I appreciate you as well. It's always fun to be able to jump on. And look, I think I got everything right this time. Like the live stream basically worked, right? I didn't like have any technical difficulties. So this is still rare. Let's see. Just wondering if you still like Cloak. That fit with our baby Bitcoin thesis way back in 2018. We were talking about that in our board meeting this morning about things like Monero or Bitcoin Cash. And although I could see a future for them, right now we're following the strongest leaders because that's where the market has the most interest. So it just makes the most sense. Colin James says, join it. It's the best group out there. Thanks, Colin. I appreciate that. DJ Spintoshi says, Tio, great to see you. Great to see you as well, Mr. Spintoshi. It's been a while. I know the live streams haven't done. What's your thought on meme coins? Not meme coins in general, but we own meme coin from Meme Land. We own Captains and Potatoes. That's the only meme coin we like and the only meme coin we will hold, personally. Mike says, good seeing you, watching from K-Town, also mods to Honda, just like lipstick on a pig. Yeah. Slick Verizon says, thanks for the gala tip. I'm not sure what you mean there. Why your rent? Why aren't you liking ETH any longer? No, even in the last cycle, I said I liked Avalanche more than Ethereum. And Avalanche outperformed Ethereum by quite a significant amount. I just think they have better technology. And I also trust people that are smarter than me. So one of our tech animals in the wild there comes and whispers sweet things in my ears about what things, and Avalanche has consistently been on that list. Awesome. Well, I'm going to leave it at that. I know you guys got a bunch more questions, but it's already been like an hour-long live stream, and my voice is getting a little bit tired. I was a little bit sick this week, so I appreciate y'all Thank you for joining us on this live stream. I've got... we're going to do it again. We're going to do these live streams maybe... let's do it at least once a month. Because get ready. The market is not done yet. Anyone who's like bearish right now just doesn't know how to do technical or fundamental analysis either. We're going up more. So be patient. How much more... It really depends on how bad it is out there, I think. It could be a lot. It could be real high because it's real bad out there. Anyways, Deal with the Arcane Bearer. Check out this. Hopefully we don't get dinged for any copyright stuff because I'm not even sure if we own this music, but someone made this for us.